Hey traders, this is Blake Morrow with Traders Summit, and I have Mr. Richard Matthews with us of One.io. Good to see you, Dick. Good to see you. And how you been handling the markets this week with all of the central banks meeting?
The plethora of central banks. I've never known a week like it. Well, I started off pretty good last week, getting the ECB right and their 25 basis point hike, and then after that, my predictions went the way of my horse racing predictions were pretty wrong. The only thing I did get right was the vote on the Bank of England, which was 5-4, which I think is quite interesting. But I actually thought there was going to be 5-4 in favour of hiking, not holding.
Yeah, so here you're right. The Bank of England, the FOMC, they did not raise rates, but to your defense, I mean the FOMC. We all walked away from the FOMC meeting thinking, wow, he sounds pretty hawkish, despite all the headwinds that we have here in the U.S. Walk away from the Bank of England meeting, and you're like, well, QT's more quantitative tightening is happening. So, what do you think about price action now? I mean, you got the dollar that's stalling against key resistance here. Are we going to see a continuation of the dollar, or do you stick a fork in it? What do you do?
I think we're at a pretty interesting juncture because a lot of people are still fixated on inflation. Inflation's just smoothing out. I actually think it's going to perk up again next month. I was a bit surprised at the inflation figures in the UK. There's no sort of reaction to the hike in gas prices. Oil's going to keep on rising, I think. So I think you're going to see inflation perk up. But I think there's two things away from inflation which are going to drive the market. I think unemployment, depending whether your glass is half full or full. And I also think that the amount of bond issuance going on right around the globe. I mean, there's 134 billion coming out in the States, which is a huge number for the market to digest without hiccups. You've got QT in the UK. You're going to have to see Europe raising funds as well. Everyone's got to pay this COVID debt somehow. So regardless of what the central banks are going to do, I think that the market's going to drive bond prices higher, well, bond yields higher, sorry, bond prices lower. And that's going to really shape the market now. So I think you're going to shift away from being obsessed with inflation. Let's watch the 10-year, for example, and let's watch unemployment. Unemployment, I think, is pretty benign, but I think it's bonds going to drive it.
So when you're looking at this move in yields, and as you point out, it's a global issue. It's not just U.S. Treasuries are selling off. You got gilts and boons, and the whole JGBs, everything's selling off. And as you pointed out, there's issuance. There's a ton of issuance. Who's going to be the buyer here? Yeah, I mean, but the dollar thus far has been the beneficiary. Is that going to continue right now? I mean, especially with everybody else's yields rallying?
Yeah, and even Japan talking about higher yields, which I think actually, whatever they do, I think yields are going to edge up in Japan. They've got a little bit of inflation there, thank God, at long last. But that will stop money coming into the States, which will force yields higher. As always, I love the dollar. Buy dollars, wear diamonds, as I've said many times before. Though I don't want to wear diamonds in central London, it doesn't suit me. I'd probably get mugged anyway. So it's interesting. Where are these buys going to come from? Who knows? So what's that do to yields? Yields have got to keep on rising until you get buyers in. And how do you get rising yields like this? With the S&P still, pretty strong, and equity's pretty strong. So eventually, one's got to give.
Yeah, at some point,
and it ain't going to be bonds.
Okay, well, that answers it. So, you're looking for equities that are already starting to show some signs of weakness, and you got like the German DAX is at the 200-day moving average. The S&P is probing some pretty key levels of support. Do you see continued weakness in global equities then?
Yeah. All I'm saying is, if I was sitting on a pot of money and I could invest it in bonds, and I'd have a pretty safe 4.5% return, as opposed to punting the stock market, I'd put it into bonds.
Well, that makes that to me makes a lot of sense. Let's see if it makes sense to the markets moving forward. Hey, you mentioned the BOJ. They are going to be late tonight for you, early tomorrow morning for you, but it's going to be Friday morning in Japan. You have any views on the BOJ moving forward?
I have a view of the ceiling actually when the BOJ when the BOJ's announcement comes out, because I ain't getting up early just to see no change. I just don't see that they'll do anything. I think they tried a little bit of manipulation of the currency by coming out talking tough. They are going to shift, but I don't think that they'll do it now. So I don't think we're going to see anything really exciting tomorrow. It's a when they move, they're really hard to read, the BOJ, and they have been for years, and they'll do it when it suits them, not the rest of us, and probably when we least expect it.
Right. So the risk is that we still see a higher US dollar, Japanese yen, lower yen across the board, which you can clearly see is still a very weak currency. Well, Richard, I know it's late for you in the UK, and I know it's it's late for you at the office, and you got to get home. I want to thank you so much for spending your time with us. But real quick, any parting thoughts about the markets and things that are keeping you up at night, or things that are on your mind before we go?
Well, I can't talk about what's keeping me up at night at my old age. A leaky old bladder. I'd still like the dollar. I'd buy on any weakness, and I'd sell cable on any strength. It's popped up a little bit. I think the market got itself a little bit overly short. As we spoke about last week, you're going to see, I don't know about 120, but you're going to get pretty close to it in the near future. I think PMIs in the UK are going to be bad tomorrow. And I think the Bank of England has seen them already. And there's someone came out with a comment that they refer to the PMIs out in the UK. So I think they're going to be bad. As always, I'm just so repetitive. I'd be short of cable. I'd be short of the euro, because I think Germany's a basket case. And I just love the dollar. And I keep an eye maybe on some of the commodity currencies. I think some of the oil producers could be interesting.
All right. Well, the dollar index is up against, its highs for the year. So any breach of 106 would be a new high for 2023, and we're not too far away from there. So we'll keep an eye on the dollar index for sure. Well, Richard, what's the best way for traders to follow your work specifically?
You can follow me on Twitter, which is at Dickie Matthews, or on LinkedIn. I'm quite active there, and also on our page, which is one.io. And I'm always open for comment.
All right. Well, thank you, Richard. It's always a pleasure to speak with you. I know we try to do it each and every week. Some weeks are better than others, but it's really great to have you here. And if you like what Richard says, make sure you give him a thumbs up. Subscribe down in the channel below so you don't miss any of these interviews, only with Mr. Matthews. So thank you, Dick. Really appreciate you. And we'll catch you next week.
Great. Cheers now. Bye-bye. Bye.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.